Hello traders, Gary Wagner here. It is just about 10:30 in Honolulu, 4:30 in New York. It's Monday, June the 6th, 2016, and this is the Daily Report for Gold and Silver. We are looking at moderately higher pricing in the precious metals markets across the board. Dollar under some weakness today. First, let's take a look at gold. 1245.41 puts it up about $1.50. That's looking at COMEX, which is just settling now. The high on the day, 1248 and change, and the low, 1240. So not very much range, but most importantly, after seeing the market move up about $30 on Friday, we didn't really get much of a profit-taking session, which tells me that the market is strong. Let's take a look at our first gold chart. And traders, the first chart that I do want to look at today is a daily chart, standard candlestick format. In fact, let's convert this to Japanese average, but we do want to first take note of the price currently, which is roughly 1247.90 to 1247.40, calling it up about $5 when we look at this particular chart, which of course is COMEX gold. And so traders, I've gone ahead and adjusted the chart, turned it into a Henkinashi or Japanese average, because what we're looking for and looking at in this chart is really different levels that we might find support and resistance. Of course, as we've talked about in terms of a major support point, we've talked about this on numerous occasions, but it's at roughly that 1200, 1208 area. 38% retracement, of course, and that is a retracement when we consider the totality of the move from about 1045 up to about 1306. That is our first level of support. We've got some minor levels of support, this one coming in here at about 1220, and our current trade that we just put on today has our stop just below 1220. We got in roughly, we'll call it 1245. Market's trading roughly in that area. Current print, as you can see, 1246 and up to about 1248. Also, when we look at these candles here, you can see that we've got a continuation of the momentum, of course, even though we didn't have that large of a move. And when we convert this back, you'll see. But when we compare it to the midpoint, because we had such a tremendous move on Friday, we fixed the open on a Japanese average chart as a midpoint of the prior trading day. Tremendous spike up just the other day. And that's why you've got such a long candle. Let me go ahead and blow this up today. But if we convert it, and we'll just do that really, really quick for you. But when we convert this back to a standard candlestick chart, you can see the huge difference. And that huge difference, let me pull this over a little bit, is this is today's candle as opposed to having that large candle because it's not generating an open from the midpoint. Nonetheless, the next level that we are looking at in terms of support and resistance levels has got to be the 23% retracement, which sits at around 44.60. Now, we opened roughly at that point, and we closed above that point. Very, very slight trading today, obviously. Very, very small range on the day. But nonetheless, my sense was that we would probably see, after seeing a 30-point rise in the market on Friday, it wouldn't have surprised me to see this market kind of correct a little bit. And I'm not talking about a correction, but a pullback where there's a little series of profit taking. It doesn't seem like we got that. In fact, what we did get was some firmness in the market. And it was that coupled with what we're looking at in terms of our long-term studies that really precipitated the buy signal we sent out today. Traders getting in. As I said, we are long roughly at 1245. Our stop is currently under 1220. And that really brings up what is our exit strategy on the trade. Now, the first level that we want to see it take out, of course, and this is a minor level, is at about 1263. It is a fib-based number, as well as these bottoms right in here, these series of lows that could provide a little bit of resistance. On top of that, you've got these series of tops at about 1280. And then, of course, 13 to 1306 and this top at 1306. So minor levels of resistance are going to start at about 63. That's a minor level. 80 a little bit stronger. And, of course, headwinds at 1306 could be significant, but I believe that the market should take that out, especially based on our Elliott wave count. Now, what I'm doing now is going in to compress this chart so we can bring up that former high that came in February of last year. That's this high here. That was the all-time high for the year. And so we're hoping that history doesn't repeat itself. One of the things that we can see already is that in February, as this market came down, it broke through many of these levels, the 23 and the 38, and really didn't find any kind of real support. Of course, this fib retracement wouldn't have been in place, but you can see that it kind of lines up with this 61% retracement at 1145. But we saw the market kind of come straight down. We're certainly not seeing that here, where it finds support at about 1200 and V's and comes back up, which brings us to our current Elliott wave count. So as we talked about over the last few days, as we revamped the basic count, because of this extended sideways action, the higher high we got, but that could in no way be construed as a wave 3. Wave 3 cannot be the smallest of the impulse waves. We certainly can't have that kind of truncation here. And so the thinking at this point is that really the move from 1045 up to these highs at 1280, that was our first, what we're calling our wave 1. And from there, we went into an irregular ABC formation, our A, our B, and then our C. Our C being a 3 count here. And that C, of course, would conclude the current corrective wave that we had been in, which of course was this wave 2 here, which brings us to our upside targets. And if this model holds some weight, it means that we've really entered a third wave. And a third wave, of course, cannot be the smallest of any of the impulse waves. And that's where I came up with some of the upside targets or figures that we were looking at on Friday. I just want to revisit them for a second and realize that all we are doing is taking a comparison of our wave 1 and beginning that at the onset of wave 3 and saying that if wave 3 goes to a 61%, which would be a real anomaly. Again, wave 3 cannot be the smallest of the impulse waves, but even just a 1-to-1 relationship, of course, would take this market well over 1400. Now, I have to stress something, and that is that what we are looking at is not an upside target 1400 that I'm looking for either on this trade or on this rally, because even in a wave 3, we will probably get within that time period some sort of a 1, 2, 3, 4, and then final fifth, even if it does pan out that way. First of all, the second thing that you want to consider is the time element. Considering that the market bottomed at the end of 2016 and hit these tops right in here mid-February, you had a 3-month period, and then that was followed by another 2 to 3 months of correction. So we could see this market move, but we're, in my opinion, of course, we wouldn't see this occur overnight. Again, this would be a multi-month rally that we're looking at. Time being, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.